On to your markets now. The U.S. administration's 10% tariffs on Chinese goods kicked off Monday at midnight, while 25% tariffs on Mexican and Canadian goods has been postponed for now. This resulted in Hong Kong shares declining from their two-month highs. Meanwhile, the Chinese government has issued countermeasures, which include additional tariffs on coal, natural gas, farm machinery and other products from the United States. The Nikkei share average rose by 0.72%. The Hang Seng Index jumped by 2.83%. And China is expected to reopen tomorrow following its celebration of the Lunar New Year. Volatility remained the order of the day on U.S. markets, with stocks closing in the red. This as market players tried to digest the varying U.S. tariff announcements. The falls in value could have been worse, but were assisted somewhat by an announcement that Donald Trump had delayed the imposition of tariffs on Mexico and Canada. The Dow Jones Industrial Average declined by 0.3%. The S&P 500 ended 0.76% in the red, while the Nasdaq Composite Index closed down 1.2%. Here at home, the all-share index is trading up 0.6% at 86,015 index points. The rand is trading at 18.74 against the US dollar, 19.40 vis-a-vis the euro, and 23.31 against the British pound. Gold is trading at $2,816 an ounce, while platinum is trading at $961 an ounce, and Brent crude oil is standing just shy of $75 a barrel. Well, for more on the markets, I'm joined by James Turp. He's the head of investment strategy and portfolio manager at Sanlam Investments. Thanks very much for joining us, James. So it's interesting to see that Asian markets close positively, due in part to the postponement of tariff impositions on Mexico and Canada. This does seem quite strange, given the fact that, you know, the imposition of tariffs is still really very much on the cards.
Thanks for having me, Nompu. That's right. Strange it is. I mean, it's difficult enough trying to make sense of how these things play out. I read a comment just now, I think it was the IMF, that said the uncertainty around tariffs is often as damaging as the actual tariff. And as you say, so over the weekend, 25% on Canada and Mexico, and now that's postponed because those two countries have come to an agreement with the US to put some troops on the borders and to secure the borders. And all of this happening whilst this delay for 30 days is still not a certainty. So there's so many moving parts here for us as investors to try and keep an eye on. It's becoming quite difficult.
Yeah. How concerning is the situation between the United States and China? I mean, what are the implications? I mean, it feels like we've been here before, especially, you know, during the last Trump tenure, because he imposed similar measures against China.
Yeah, I mean, that's the focal point, and it is the year of the snake, I think I heard earlier too. I mean, that's ironic in itself, but I think it's all about this trade war between Canada and the US, and it's the 10% tariff that he's talking about, that is going ahead as it stands. There's no delay on that at the moment, but it does seem like this is a tactic. Come out with the tariff and then see how the negotiation goes from there. But we know China's come with some countermeasures already, and the big fear for global growth is a trade war that escalates, that starts constraining the supply side, that leads to inflation. So you've got to look at a few things here also, taking into consideration President Trump's view on US growth is often equated to the performance of their equity market. So one thing that may change and cool things down is if you get an equity market that stops performing. That at the moment is something that is being flagged as something to keep an eye on. But ultimately, we here in South Africa, we're so dependent on the state or the health of the global economy that this is concerning to us. And so watching this play out, you can imagine just how our asset markets behave behaved. So we've seen it already. The currency weakened this week, and our bond market as well, our equity market that, as you quite rightly point out, recovering today. But all of these balls in the air at the moment make it for a difficult market for our investors.
Yeah, but in principle, aren't tariffs negative for everybody? Because Donald Trump will impose tariffs on China. They'll, counteract. In other words, they will also revenge. And everybody else, if we assume everybody else does the same thing, it means prices are going to be higher. The question is, who pays that price? Do companies now cut their margin, or do they try and transfer the increase to the consumer? And just give us the process where we now start getting concerned about inflation in general economies.
Yeah, you've kind of got it right there, certainly. The tariffs that are imposed are beneficial normally to the biggest economy. The most self-sufficient economy will benefit. So that's why the US finds itself in this position of issuing tariffs. Someone's got to pay for those tariffs. And as you say, so in some cases, the producer will take that into their margins. We've seen that here in South Africa with high levels of inflation for many years. The shops and the supermarkets took those margins into their own bottom line. So that's equitable to that. Ultimately, the consequence will be higher prices somewhere. And unless you can produce locally, it's going to be inflation for the world. And that's the complicated part at the moment. And ultimately, global growth will pay for it. If it isn't, so one economy will benefit, but perhaps the world will not.
Indeed. Well, James, we're going to leave it there and look forward to conversing going forward. That was James Turp. He's from Sanlam Investments.